everybody. Luke Gromen, FFTT. Hope everybody's well and had a great weekend. We had a big victory in the last minute here for my beloved Cleveland Browns. So we are actually 5-2. And do I think they're for real? I think we're aiming for a wild card spot after the Baltimore Ravens, and we got to beat the Steelers still. So, at any rate, hope you guys had a great weekend as well. I'm going to jump right in here with a few of the questions. So, the first question comes from JSTT. You've argued that although banks are generally not lending into the U.S. economy, they are lending to the U.S. government. How do you approach weighing the deflationary force of the former versus the inflationary force of the latter? I thought it was a great question. And to me, the non-lending or the shrinking of lending into the real economy, right? So if you look at the Fed's H.8 report, what it shows is that loan growth is still shrinking. Last update was mid to high single digits on an annualized basis. In aggregate, total bank loan growth within the United States, I think it was down 7 to 9%, I believe. But within that, over the last 3 months, the annualized rate of growth of bank treasury holdings in the United States rose at respectively 48%, 39%, and 24% in June, July, and August. So there's a lot of lending going on to the U.S. government, which is what buying treasuries is. There's not a lot of lending, bank lending going on into the real economy. The latter is deflationary, the former is inflationary. So how do I weight the two? Ultimately, right now, the deflationary forces of non-bank lending or the shrinking lending into the real economy are dominating. However, I think it's important to watch the ongoing fiscal response, and that is why I think this stimulus conversation is so important that we're seeing now. And I think this is a stimulus conversation that's going to continue as we move into 2021. Bigger picture, it's an ongoing shift of the U.S. economy that we all grew up with towards what I've been calling in our research a U.S. economy with Chinese characteristics. It's becoming much more centrally directed, and that is what it is. So to me, I think it's going to be really important to see if there's basically the inflation versus deflation is going to be, is there enough fiscal action or is there not enough fiscal action? And if the answer is enough fiscal action, as we saw from March to August, that's inflationary for both assets as well as commodities. And if there's not enough, as we've seen since September and October, that's deflationary. So let's watch the fiscal side. Is it enough? Is it not enough? Second question, JP, do you think the milkshake ever happens? I think the milkshake already happened. I think Brent was exactly right when you look at both on a long time scale of history over much of this cycle, last couple decades. You've seen net international investment position of the United States has gone from negative 8% in '08 to negative 60% this year. That is basically foreign investment flowing here with a strong dollar. I also think much more specifically, it already happened February of 2018 through September of 2018. You saw the Fed raising rates, you saw the dollar strengthening, you saw stock prices rising. And I think ultimately what we had said was, look, it's less, you really can't have all three of those on a sustained basis. It's a trilemma. You can have rates up, dollar up, two of three of rates up, dollar up, stocks up. And sure enough, later that year, obviously, fourth quarter of 18, the S&P dropped 20% in a quarter, one of the biggest single drops in the S&P quarterly drops in history. Rising rates blew up the economy. And ever since then, basically, we've seen dollar up, stocks down, or stocks up, dollar down. And I think that's ultimately, given the debt levels and where we are in the cycle, likely to continue to be the case for the foreseeable future. So, third question, Charles, the macro environment favors both gold miners and Bitcoin. Bitcoin has many features that make it gold 2.0, yet it seems your base case is gold is slightly better than Bitcoin. Can you discuss the reasons why? Look, I like them both. In many ways, gold, I agree with a lot of what the Bitcoin proponents say, which is that Bitcoin does a lot of the things that gold does. It just does them better. I think that's true in a lot of ways. In my opinion, gold is a lot like Bitcoin, except gold has less volatility and maybe a less upside. If you look at it strictly on a stock to flow basis, you can make the argument that Bitcoin does have more upside, but also more volatility. The one thing I continue to not hear Bitcoin proponents talk about, and it's something, again, I like Bitcoin a lot. I own Bitcoin. I've been buying more Bitcoin. The one thing I do not hear a lot of Bitcoin proponents talk about is that gold is on central bank balance sheets and Bitcoin isn't. And so if there is some sort of monetary system reset where the system as it stands now remains part of what comes next, to me, you need some sort of pivot to revalue or to devalue debt, to recollateralize central bank balance sheets, and gold's there and Bitcoin's not. And that, to me, I think is important. The way I look at it is you need to own both. And so I think waiting is a personal preference, but I think you need to own both. Next question, the Great Reset from MT, the Great Reset. What do you think? That is a big topic that's going to be hard to cover in the brief span of this. To me, the Great Reset, if I had boil it down, is pretty straightforward. The debt's unsustainable. You need to make changes to the system as it's structured. You need a significant restructuring of the currency system. You need a significant devaluation of the debt outstanding on a real basis. And you need political cover to get it done. And for as tragic and problematic as COVID has been, one thing that it is providing in spades for policymakers is, what did Rahm Emanuel say? Never let a crisis go to waste. Well, they've got all the political cover they could possibly dream of in the form of COVID. And so let's watch and see. But that's what I ultimately think when you hear Great Reset. When I hear Great Reset, that is what I'm thinking about, is ultimately the debt's unsustainable and there need to be changes made to the system, and the real value of debt needs to be written down to avoid a much more chaotic systemic collapse. And then the last question from JM. I've been watching some of Peter Zeihan's predictions. He's saying the USA will be vastly retrenching its military presence worldwide. Does that make sense? In my opinion, yes, it does make sense. There's a great book entitled Time to Start Thinking, America in the Age of Dissent. It was written by Edward Luce, Luce. I would highly recommend it. The book was in 2012. And the book interviews luminaries in U.S. politics, technology, academia, finance, government, and basically looks at the system with a critical eye. And it's basically a book that says, look, America, I love you, but yes, you look fat in those jeans. And the reason I bring this book up is Luce was invited to participate in an Army War College strategy session that very few outsiders ever get to attend. And early in the book, 16 high-ranking U.S. Pentagon officials came to the conclusions after their study is the U.S. has until 2021 to make decisions, and then their hegemony is going to start to be eroded by fiscal realities. They recommended a significant cut to U.S. defense spending and reinvesting that defense spending into infrastructure, education, foreign aid, retraining of workers. It's really interesting to me because it sounds a lot like what Donald Trump ran and won on in 2016. So these are the senior levels of the U.S. Pentagon in 2011, saying America still has choices. By 2021, America will be out of choices because of the U.S. fiscal situation. And so my point is that I think what Zeihan's talking about does make sense. My view is it's less America doing it necessarily out of a practical decision or a strategic decision regarding the military and where they want to be. I think it's much more driven by fiscal realities, that basically we're out too far over our skis and we can't afford all these entanglements, which is exactly what high-ranking officials at the Pentagon called them and talked about. So I think we may be watching that play out, and of course that needs to be talked about from a position of strength. And to be clear, I think our military is still the most dominant in the world. I just think the military also understands that, as U.S. Marine Corps General Barrow once said, amateurs study tactics, professionals study logistics, and the professionals at the Pentagon are looking at the logistics of our supply lines relative to our fiscal situation, and they're simply not sustainable anymore. And so I think we're seeing that play out in real time, potentially. So let's watch that going forward. So with that, I'm going to finish up for the night. As always, if you like these updates, please check us out, FFTT-LLC.com. You can find out more information about our research product offerings there, both the institutional side, also on the individual side. These quick updates dovetail pretty nicely with what we do with FFTT tree rings. We continue to get great feedback on that. So check it out again, FFTT-LLC.com. Otherwise, everyone have a great rest of the night. Have a great week, and I look forward to talking with you soon. Thanks, everybody. Take care.